So there are some life events that happen in life. One of those life events is that you get a new job offer, right? So with the new job offer, do your job provide life insurance? And if they do, how much do they provide? Right? The second one is you have a new baby in the family. So congratulations, you have a new son, you have a new daughter, a newborn in the families. Now, who's gonna take care of it? Who's gonna take care of your son and daughter if you were to, let's say, not be here anymore, and you were to pass away? Who will take care of your family as they grow up? And then you have a new home. So you went and bought a home and you added a mortgage to the house. Now, yes, it's great that you got a new home, but understanding that mortgage is a debt. Who is going to pay for that debt if you're no longer there? Will it be your wife? Will it be your sons and daughters? Do you want that debt to fall on their shoulders? So that is something to think of when you get a mortgage. And then you have a new family. You just recently got married. That's another big life event, a major one. And now you're not just providing for yourself, you are providing for the two of you, a household that has you and your loved ones, that have you and your wife, your spouse. So now you're not just providing for yourself, you're providing for both. So that is something to consider when you're getting married. So now something that we like to avoid is the funeral costs, which is death. We humans, sometimes we don't like to talk about it. But funeral costs and funeral planning, that is something that should be more prevalent, more present in your planning. And it's more than just the funeral costs, it's also what are you gonna leave behind, which is come back to this conversations on protecting your legacy. And are your families, because you're the only, let's say you're the only breadwinner, right? Are your family going to dig into their savings to live on going forward? Another one is you have debt. If you have debt, whose shoulders are those debts gonna fall into if you were to pass away? And then if you're unable to pay the mortgage because let's say you are the only breadwinner, the bank could foreclose your home. It's something scary to think about, but it has to be thought of. It has to be planned for. And then after everything, now the bills. Who's gonna pay for the electric bills? Who's gonna pay for internet? Who's gonna pay for phone bills? Who's gonna pay for groceries? How are the family going to move forward if they have all of this, debt, foreclosures, and all these issues after you were to pass away? And a simple solution is life insurance. Life insurance is simply a contract between you and their life insurance company, the carrier, stating that as long as you pay the premium when you pass away, the carrier will pay the promised death benefit to your beneficiary. In a way, your families will be taken care of. And that is why I said life insurance is useful. Now, there are two types of life insurance. There is the term life insurance, which is a life insurance for a specific amount of time. Usually, people like to get like 30 years terms. So they will get life insurance coverage for that 30 years. It's much more affordable. Then there is the permanent life insurance. The idea for permanent life insurance is that you will have this policy for the rest of your life. As long as the premium is paid, you will have the policy. For terms, it's usually more affordable, whereas for permanent life insurance, the premiums or the cost of insurance is higher compared to terms. Sometimes can be 10 times higher for the same coverage. The advantage of a term life insurance is that it has a lower initial cost of insurance for a higher coverage. So I recently worked with a client of mine, and I was quoting out $1 million in term, right? And that client of mine is like, it's in his early 30s, and the premiums for him was actually like $50 to $60. Pretty affordable in a way. Yeah, it's very affordable, but it's only within that certain period. So if you have a 30-year term, then you'll have life insurance for 30 years. So like I was saying, it's used to protect against your mortgage, your debt protections. You have a young family. you can get 10 to 12 times the annual incomes, like your annual incomes. And it's budget friendly. So it has lower premiums for a high coverage compared to permanent. Now, a permanent life insurance policy, the pros that it's lifelong. That's what's supposed to do. Supposed to have a lifelong coverage until you pass away, and it has a cash value growth that is built in there, and it's tax deferred saving. It's flexible in the premiums, especially in a universal. And then you could take a long oil withdrawals against that cash value. The cons, the negative part on this policy is that its premiums are pretty high. Sometimes it can be as high as 10 times the same coverage for a term policy. It can be very complex and very expensive. And in that complexity, I have seen some policy that is not properly structured, and there is potential for lapse. The premium is not paid, and by lapse I mean the cash value is eaten up in the cost of insurance, and that can make your premiums go way higher compared to what you're currently paying, and if you're not able to pay it, then the policy lapses. So who should we consider for a permanent life insurance, like an IUL, right? Who are we looking for? It's usually for those clients who has a higher income. There are clients who has already maxed out their Roth IRA, they already maxed out their 401k, and they still need something that is tax deferred, something that is taxably advantageous to them. Those are the clients that I would recommend an IUL to, not the everyday who are working end to end to meet, like let's say, to meet the debt requirements, to meet their mortgage, to meet their homes, to get food. I wouldn't recommend an IUL for those. Why would you get a life insurance that is so costly that it could eat 50 to 60% of your income? Basically make it make sense. And then there is the third option, which is the guaranteed life insurance. It is a permanent life insurance, but it's more so on those who are very sick, very, very unhealthy. It will be clients who needed this to cover their funeral costs. Pros of this is that it's guaranteed permanent life insurance, meaning you don't get any medical examinations. You are guaranteed to get through to the process, and which is awesome. And it provides that coverage so that you can cover your funeral costs. Now, the cons of this policy is that it's graded death benefits, so you are actually limited in how much coverage you can get, and you have a 2 years waiting period. And after the 2 years, the policy will pay out. If you were to pass away within that 2 years, then the payouts will be usually 10%, 110% of your premiums that you've paid into the policy. Some insurance products can actually offer like 130% of your premiums. And you want to know more, just DM me on this, and I can provide you the details. Now, general recommendations for people for these products are people who, let's say, who are going through dialysis right now, who are having their cancer diagnosis, and people who are very, very sick, who just needed this so that their family doesn't have to cover for funeral expense. So who should get life insurance really? There are people who are singles trying to lock down a lower rates and their insurability for the future. People who have student loans and they want to hedge life insurance against their student loans or help pay off their debt so the family doesn't have to pay. A married couple paying off the mortgage, and families. So like I said, life insurance is for your loved ones. So people who has a families, life insurance buy for them so that they don't have to struggle financially after you as the breadwinners was to pass away. Another is socially retirees. Like once you're retired, your life insurance with your employers is gone. So you're gonna have to get some more individuals, and individuals can provide more than what the employers offer. And then retirees, those who are very old, they want to leave a legacy for their loved ones. Yeah, they just want to help their families one last time. That's for the retirees.